Hello, Uncle Jim here. I'm actually filming this video from a hotel in Mississippi. I'm traveling with my son. Today I want to actually share with you how you can make really good passive income via the stock market. This includes actually earning good premium from selling options as well as dividends. I'm going to go over my trades from last month, show you how I did, what things worked out for me, what things didn't. So stay tuned. I think you're really going to enjoy what I have for you today. Okay, now the key points for this video. I first want to start with what I think is going on with the market. Are we done with the bear market? We had another good day today. I don't think we are. I do believe that with the Fed increasing interest rates and this new legislation that's going to increase taxes, I do think we're going to get some headwinds, and I do feel like we may hit lows or lower lows later this year. It could be late summer, maybe, September, or it could be, sometime around October or November. But I do think there's a good possibility we are not done with the bear market. And the main reason I want to share that is now's not the time to be changing your risk strategy. I do feel like most people should be risk averse at this time and not take too much risk with selling options or with buying stocks. Stick to what you've been doing during the bear market until I'd give it a little bit longer. If we're still going up, say in October, then I do believe we'll be done. At that point we are probably in a bear market. So that being said, let's jump into the rest of the video. And I do want to share with you kind of why I'm doing this channel. What's my goal? My goal is for people to understand that you can do this yourself. I'm not a financial expert. This is a hobby. This is something I like to do, and I've been able to turn it into some really good passive income. And I first started probably almost 10 years ago just selling covered calls. I didn't know what I was doing. I was making some extra money. I didn't realize you could manage the trades, and in a lot of cases, most of the shares that I sold covered calls on were never assigned away from me. I did them high enough that, and probably didn't pick up enough income, and most of them expired. Now, a little over 2 years ago, I did run into a situation where I did have some get assigned, and at that point I decided, wow, I don't really know what I'm doing, and I decided that I wanted to dig deeper. I really wanted to learn the right way to work with options, how to sell options the right way. And that's the whole goal of this channel, is to share with you what I've learned, so hopefully you don't have to go down and make the mistakes I did. So that's the goal of the channel, for you to understand you can also do this too. You can make some really good passive income, and you can follow my journey. I have videos that share lots and lots of information on different ways to do it and the mistakes I made along the way. So for this video, I wanted to kind of go back to basics. First, I wanted to talk about there's really two types of options: put options and call options, and they both work in similar fashion. What's wonderful about the options market is people will pay you, in the case of a call, to call away your stock. So if you have a stock that's 50 and you're willing to sell it at 55, there's people that will pay you for that opportunity to call away your stock, and they'll pay you a nice premium for that. And when you actually sell the option, that cash actually hits your account right away, so it becomes a great way to make passive income. And a put works in a similar way. So if you want to own a stock, you could sell a put, and when you sell a put, that's saying, hey, I want this stock at this price, and someone's willing to pay you for the opportunity to put that stock to you. So in a way, it works in a similar way. Again, let's use the $50 stock example. So say there's a stock and you want to own it, and you want to own it at 45, you could put the strike price at 45 and sell a put to someone who will pay you some income to be able to sell you that stock at 45. Now, what happens with puts, at least with me, is I end up selling them again and again and again, because either the strike never reaches it, or I roll it and I'm able to roll it and continue to make income. Now, I have had some stocks put to me, like I had some Intel put to me, and I had what else? I had, I believe, Big Lots, also some Cisco that was put to me. And again, if you're focusing on stocks you want to own, then that's perfectly okay. So I was perfectly okay to own those stocks. Even Intel, which has gotten hit hard lately, I do think long term it will come back. So that's the beauty of the options, and I kept it real simple. I have plenty of videos out there that go into more detail on how to sell both puts and calls. And then the other part is, if you're doing this with dividend-based investments like ETFs that focus on dividend companies as well as dividend companies themselves, you can pair that with dividends and you can really do well. Like this month, you'll see up here above me that for the month of July I was actually able to bring in over $5,300, over $2,000 in put premium, over nearly $1,000 in call premium, and in dividends of $2,222, which is a great amount of income. I'm able to live off this amount of income that I earned in July. This is enough for me to live off of, not even thinking about the work I do consulting and writing code. So that's kind of a quick overview. The next part of this video, I'm going to actually jump through and show you my trades, and I'll add some commentary about each trade and why I made it, and what the investment is. Do I still like the investment? So stay tuned. This next part of the video is really important. I really liked watching these kind of videos with other people, and that's why I like doing it, so you can actually see my trades, and I'll go into more detail about them. So stay tuned. Let's jump into that next part of the video. Here's my July options worksheet. Before I jump into it, I do want to mention, please hit that like button, subscribe. In the description, I'll have information about my Patreon memberships. You might want to take a look. It may be worth your while to join one of the memberships. I'm currently making some changes, and I think it's going to improve them quite a bit. So that being said, let's actually jump into the trades. What I've done is I've actually sorted these, and the ones with the highest premiums are on the top. So the first trade that I'm going to talk about is SDY. This is an ETF. It's a mid-cap ETF, and it's worked out really well for me. I've made really good returns with it, and it does pay a dividend. I don't think it's a real high dividend. And let's actually look. So I sold 3 contracts. These were all new contracts, covered calls, with strikes of 131. Currently, when I sold these, the current price was 120. So, and looking at delta, it's not a real high delta. I believe, what is that, 0.197? So I'm pretty much still sticking to the 20 deltas with the calls. So it's a little risky, but not much. It's still below the 20 delta that I like to do, or the 0.20. And for that, I actually brought in nearly $400, $374. So a really good trade. It's a good ETF that I've liked. It's been down a little bit during the bear market, but since I've owned it, and I've owned it for many years, I've gotten really good returns with it. So I encourage you to take a look if you've never worked with SDY or have never taken a look at it. It may be worth your while to take a look. Next is DVN, which is I believe it's a utility or energy company, and it pays a good dividend. It has good financials. I did a vertical put credit spread. I did 2 contracts. These are new contracts, and I did the strikes of 33 and 25, 33 being the short and 25 being the strike that's farther out. And let's see, the delta was lower, 14.4, so like a 14 delta, which again is what I'm shooting for, like a 15. I prefer with my puts to do like a 15 delta, take a little less risk. Again, the lower the delta, the less risk you're taking. To give you a for instance, you make a lot more premium with a higher delta. It's like a 30 delta. You will bring in a lot more premium, but you're taking much more risk, or much higher risk. and the current price is 41. And I did again at the 33 is the short strike. So fairly far outside the money. And for those two contracts, I brought in nearly $300, $291. So it worked out quite well. And again, a good company. And I actually did it in two different accounts. I also did a cash secured put in a different account around the same time, and pretty near the same risk level, a little bit lower risk, unless that's a typo. It could be. Expiring on the same day, 1/20/23. Actually, the current price is higher, so it must have been. It must have, I believe DVN came down quite a bit when oil started coming back down, just like Exxon, and a lot of the oil companies have come down recently because of the price of oil coming down. And for it, and I believe this is only one contract. Yeah, one contract. I brought in over 200 and what is that, $240, so not bad. Next is Apple, and I've been selling Apple up until recently, mainly because Apple's come way back up. And this was a vertical put credit spread at 130, 120 strikes. So the short 130 and the farther out 120. And I was able to run this 2 or 3 months and roll it. It's two contracts, a delta of 0.2. And at the time, Apple was at 147, and I believe this one expired. And I picked up another 240 some odd dollars. Now I have not done any Apple in August, mainly because I believe it's around 265, 270 now. But it's worked out really well with me. If I could pick up Apple at around 120, 130, I'd be really happy. But it currently has jumped way back up. Next is ASO. Which is Academy Sports, and another one I really like, pays a good dividend, good company. And this one I actually rolled. It looks like Apple I also rolled. And it's a vertical put credit spread at 35.25. And at the time it was at 42. And picked up, I rolled it out to November. And I picked up another $200, so not bad. And next is Cisco. So I did two contracts in Cisco, and these were new contracts, and it's a covered call. So I had mentioned earlier in the video, I did get assigned some Cisco, and I went ahead and wrote some covered calls on Cisco now, and I did the covered calls at 50, which is higher than what they were assigned to me at, and this is a delta of 25. So I did, again, with calls, I'm taking a little bit more risk compared to puts. And I did an expiration of December 16th. The current price of Cisco was 44, and I brought in over $200, $210. So, not bad. And that's truly the wheels, since I had originally sold a put. It was assigned to me, and now I'm selling covered calls. So it truly is the wheel strategy with Cisco, and I really like Cisco. Cisco's paying over a 3% dividend, and it's, in my mind, it's way underpriced. I think when we do truly hit the bull market, I think it's going to come back up quite a bit. Next is Best Buy, BBY, another company I really like, pays a good dividend. I like going to Best Buy. I buy a lot at Best Buy. And I like a lot of the strategies they've done lately with, I believe Apple even pays them to have sections of the store. They've changed a lot of the ways they're doing business, and it's been a good company to own. So this one I also rolled. It's again a vertical put credit spread, and what is it, 68.60, so not a real wide spread, only $8 for each contract, and these were two contracts, and at the time it was at $76, so pretty far outside the money. I rolled it out to 9.16, and I kept it. Actually, I lowered the spread a little bit. I went down to 67.50 versus 68, and I brought in over $204. So Best Buy is another really good company to sell options. There's always a lot of premium. It's a good company to own. I definitely would love to own it. So at some point it probably will get assigned to me. It's one I may take a little bit more risk, again, because I really want to own it and pick up those dividends. Next is Bgfv, which I believe is a sporting goods company, and it's inexpensive. It's a great stock to own for small accounts. I rolled this one again and picked up some good premium. It was a cash secured put, primarily because the strike's at 12.50, so you don't need a whole lot of cash to be able to do the trade. And I rolled it from 7.15 out to 10.21. I kept the strike the same at 12.50, and I brought in over $200, which isn't bad on, that's like a 10% return for those 2 months. So or 3 months, I guess. This was back in July. So not bad. Again, another good company. I've been rolling options with it for a while and done quite well with it. Next is PG, and this was a new contract too. I believe it's a covered call. Yeah, a new contract, covered call. I did strikes of 165 and had it expiring on 1/20/23. Current price is 144, so it's pretty significantly out of the money. I didn't write down the delta for some reason, but my guess is it may even be below a 20 delta. And for those two, I picked up $200, so not bad. Another example of a good cover call. And PG is, again, another company I really like, and I've been able to sell quite a few cover calls on it and make some pretty good income. AA, I believe that's Alcoa, and this was also another new contract. Two contracts, vertical put credit spread. One of the smallest spreads I've had, 30-25, so I only need $500 of margin or cash for each contract, and didn't take a whole lot of risks. A 17 delta, 0.172 for the delta, expiring October 21st. So I did go a couple months out, and I brought in 180 some odd dollars. So not bad. Again, another good company. Any of these companies are good opportunities or good investments. So I encourage you to take a look if you've not actually thought about owning any of these. These are all good companies. Another good company, 3M, is the next one. This one I rolled 2 contracts. These are vertical put credit spreads, 145, 125, or no, 135, 125 with an 18 delta, and I rolled it from 7.15 out to 10.21, and I believe this one was in the money, so I didn't make quite as much, and I think I widened the spread a little bit. Yeah, I went from 135, 125 to 135, 120. So, and I believe 3M has come back some with the market recently, but I did pick up, what is that, $154 or so. But 3M I like. It's been hit a little bit hard by the bear market, so it's been fairly reasonable, and it pays a good dividend. Another good company to own. Next one is Micron. And I did 2 contracts. Again, I rolled it. It's vertical put credit spread. It has fairly wide spread, 69.57, and I rolled it from 7.22 out to October 21st. So what is that, 3 months? And let's see, did I keep the spread the same? I did widen the spread a little bit. So that's one of the things I'll do at times if I'm still trying to roll it. So I did widen the spread from now it's a 15 spread from, I guess, a 12 spread. So, and I picked up $138. To me, what's important is keeping the short. So the $70, picking it up at 70 versus 69, I wasn't too worried about. And Micron, unfortunately, I believe it came out with so-so earnings yesterday. So I believe it's trading right around 60. So this is one that could very well be assigned to me in the not so distant future, depending on what happens. The chip makers have been hit really hard recently. Next is WBD. This is, I believe this was was this a covered call? Yeah, a covered call. This was from AT&T. It's they sold part of their operations. I forget. I can't remember what the name of the company WBD is, but I sold a covered call on it. I did it at 1750, and I took a little more risk. It's almost a 30 delta, and currently it's trading at 14, or at that time it was, and I picked up 120. What is that? $125. So not bad. Sorry, I can't remember the actual name of the company, but it's an entertainment company that AT&T diversified from, and it's partly the reason why AT&T's dividends have come down so much compared to what they were paying. And it's not done real well. I believe it came when they first diversified. It was like in the 30s, and it just has gone down. Only recently has it started to come back up. So, but not bad to be able to sell a covered call on it. Next, I actually have DVN again, and this is another new contract, and it's a vertical put credit spread. And this one also has a much thinner spread compared to some of the others. 52.47? Yeah, 52.47. And expiring on 8/28. Currently is at $60. So, and I was able to pick up almost $120. So not bad. And it's been one of my favorites lately. So I have no problem with owning DVN or Devon. I believe it's called Devon, and it's one company that pays really good dividends, and it looks like it's got really good financials. So another Best Buy, I rolled it again. The same two contracts. Again, 67.50, in the outer arm 60, and I rolled it from July 15th. Again, a little bit of a higher delta. This time I did a 21 delta, and I rolled it out to August 5th. And did I widen it again? I just set it back to 68.60. It's in some cases the chain it's 67.5, and in others it's 68. So originally I believe it was 68.60, so now it's back to 68.60, and I brought in another $106, and that's, I believe, the second time I rolled it in the same month. So Best Buy, again, it's a great company. It's something, if you haven't looked at selling options on it, give it a look. It's worked out well for me. Next one is Corning GLW, and two contracts. I rolled them, and it's a vertical put credit spread. I rolled it with strikes of 35.25, and I rolled it out to September 16th, and I kept the strikes the same, and I picked up $76. So this one was in the money. So you'll see the current price. It was below, I believe, what is that, 35.25. So it was in the money by a couple dollars for a $35 stock. That's pretty deep in the money. These last two were deep in the money. This last one I only made $5, and it was Franklin Resources, BEN, and it's fallen out of favor recently. It's been one of the companies I really like. I really do like Franklin Resources. They pay good dividends, and they typically have had good financials, so I do think they'll bounce back. But I rolled two contracts. The strike originally was 27.5 and 20. I took a little less risk, so it was a 17 delta with the roll, and I rolled it out to October 21st. And did I keep it at the same? I widened the spread a little bit in this case, but again, I kept the 27.50 the same, but I did go a little lower on the option that I purchased, the farther out option, and for that I only made $5. So the goal with it was just to roll it and give me more time to figure out what I want to do with it. So, and I believe that was the last trade. So I did a total of 17 contracts. So I have a little trade summary here. I did 17 contracts. 9 of those I rolled, 8 were new, 4 were covered calls, 11 were vertical put credit spreads, and 2 were cash secured puts. So a pretty good breakdown, but you can clearly see I probably did more vertical put credit spreads, and more of those were trades that where I actually rolled. Here I also shared, and this was in the beginning of the video, where you can see the breakdown by put premium and call premium. So I definitely did a lot more put premium than call premium, and that's been the case more often. I really like puts. I'm able to really make some good premium with puts. And here's the final breakdown where you can see the total premium that I brought in for the month, which was $94. So it was one of my best months. I think I've only had 1 or 2 months that have been higher than that, and that's like 182 average for each trade, and that's even with the Franklin Resources trade, which was only $4. If you take that out, then the average trade was probably pretty close to $200. And then here's the income for dividends, 2,222. And again, most of the stocks that we just went through and ETFs all pay dividends. I've been a dividend investor for many years, all the way back into the 80s, and I really like dividends. So to be able to bring in 2,222 in 1 month for dividends is really good, and over 5,000 for the whole month. Again, this is more than I need to live on a monthly basis. One disclaimer, I guess, about the dividends: July is one of my highest paying dividends. On average, it's like $1,500 a month if you average it out for the whole year, but I'm trying to bring that up. My goal is to maybe get that to $1,800 by the end of the year. So those are my trades. Each week, I probably don't spend more than a couple hours each week making these trades. With doing a roll, it's especially if you're rolling a covered call or cash secured put, it's real simple. I do want to mention I always do market trades, and I do it with Schwab. That way I don't do limit trades. I don't try to get a specific price. When the market's up, I will typically do a market trade, and I found probably in 70 or 80% of my trades that I do market trades, well, of course all my trades are market trades, but 70 or 80% of those I get price improvements from Schwab. So if they can do better, they will, and in most cases they do quite a bit better. I believe I did a trade earlier today that was, I think, $12 better. And that's partially why I like working with Schwab. It keeps things easy. I can always get someone on the phone if I have any questions. So that's it. Those are the trades for July. Again, July was one of my better months. If you have any questions about any of these, please add a comment below. I really enjoy getting comments. I have changed it recently. I had it set up where I have to review every comment, but I have changed that recently, so please leave a comment. I'd like to get some discussions about these, so if you have a question about any of the companies I talked about, please leave a comment below, or any of the trades in particular. So I hope you enjoyed that. I hope you have a wonderful day, and thanks for joining me.